Welcome to our Cafe Series webinar. I'm Neville Hughes and I'm the Director of GTC Financial. GTC is an accounting and financial planning firm, and our purpose is to help clients achieve financial independence. A key part of this for small business owners is making sure their businesses are profitable and have strong cash flow. The current reality, however, for many small business owners is not this. Many are working long hours and very hard in their business. They suspect that they should be doing better but don't really know why, and cash always seems to be tight. This is a really frustrating position for them to be in. If that's how you feel, then you have company. However, it doesn't have to be that way. However, for it to be different, you need to make changes that will have a positive impact to your business. And that's the purpose of this webinar. This webinar will show owners of cafes and other hospitality businesses how they can work on their business to get a better result. We're going to be using a tool called the growth equation to show how small changes to key inputs can have a big impact. I'm actually going to cross over to the case study now. The tool we're going to use is called the growth equation. The version that we're using here today is actually an Excel version. It's a very old one. If we're working with a client at the moment, we'll be using an online version, but we're not going to be doing that today. The purpose of the growth equation is to show what it's possible to achieve financially in a business. Normally, if we're working with a client, at the end of the session, we would prepare a simple business plan from what's come out of the growth equation, but we won't actually be doing that today. This one's a fictitious example called Cloudy Bay Fine Foods, and it's a deli cafe. It's owned by a lady called Nigella, so there's no secrets as to who my favourite celebrity chef is. She's a great host, an excellent cook, makes sensational coffee, and also has a selection of specialty foods you can't buy in the supermarket. Her customer base is mostly walk-ins, and they're repeat walk-ins, as you'll see. However, she does have some businesses she's providing catering services to. Nigella's a good businesswoman. She knows her numbers, but she's a bit frustrated because she's working really hard and believes she should be doing better for all the effort. So we're going to be using the growth equation today to help Nigella come up with a better result for her business. We're going to start by walking our way through the growth equation from the start to the finish so you can see how it works. The first thing you'll notice are there orange as well as blue and white areas. The orange areas are the activities, and we're going to be making changes to those activities to see what the results are, and they're the blue and white areas. So the numbers that we're using today for this fictitious business are based on 2017-18 financial years, and then the result is going to be a plan for Nigella for 2019. The other thing that's important to notice is that up here, there's a valuation section based on a multiple of 2.5 times. We're not going to be talking about valuations today. This is a very rudimentary valuation, and we won't go into that. On the bottom of this spreadsheet as well are some cash flow items. We're not going to be focusing on cash flow today as well. So, the growth equation. We start off here on the left-hand side. Nigella has 400 existing customers at the 1st of July 2017. As I said before, she's a great host. She keeps all of her customers, so she retains all 400 during the year. During the year, she has 20 odd new potential customers or leads walk through her door. She's converting half of those into customers. So at the end of the 2018 year, she has 410 customers. Those customers are buying from her about 35 times per year, so just under 3 times per month. And they're buying on average $54, excluding GST, each time they shop. So if you 410 customers times 35 times per year times $54, Nigella achieves almost $775,000 in sales, excluding GST, for the year. So it's not a huge business, but it's not unsubstantial either. From Nigella's sales, we take 42.1% cost of sales. So that's the cost of all the product that she sells, all the inputs to the food that she makes, all the things that she buys to resell. We also take off her normal business expenses, all the overhead she needs to spend money on to make sure that her business functions well. She's spending just under $360,000. That's just under $30,000 per month. And this achieves a net profit of $89,000 for that year. It's important to point out here that these expenses, they will include the wages and superannuation paid to Nigella's team, but they don't include Nigella's wages. And the reason we do that is we're going to benchmark this business against industry averages. And the industry benchmarks we use don't include owners' salaries or other benefits. So we do this to allow a valid comparison. When I'm running a business planning session using the growth equation, I ask clients 3 questions in respect of each driver. And the first question is, were you aware of the number? I said before, Nigella knows her numbers, so she's pretty astute on that. But it never ceases to amaze me how many business owners don't know the key numbers for their business. They might know their sales. They might even know their net profit. They certainly know how much cash is in the bank. But they're not drivers of sales, profit, and cash flow. If you don't know these numbers in your business, then I suggest you find out as soon as you can. This information can not only help you improve the financial performance of your business, but it also forms part of the goodwill that you hope to sell at some stage in the future. You just imagine this. If you could tell a prospective buyer of your business how many existing customers you have, how many of those customers you retain, how many new leads came on board, how many of those leads you converted into new customers, how many times on average per year they were buying from you, what their average spend was, who your key suppliers are, and what percentage of your turnover that was. Just imagine how powerful that would be if someone were looking at your business and you could tell them all of that. If they were comparing that to a similar sized business who didn't know what their key drivers were, your business would look far more in control and be worth more. So how do you get this information? Well, having a cloud-based point of sale software such as Counter, that's Counter with a K, that is automatically linked to a cloud-based accounting program like MYOB or Xero, will make keeping track of this information much easier. Remember I said I asked 3 questions. So the next question I ask clients during a business planning session using the growth equation is, what ideas do you have to improve each number? And we focus on the numbers one at a time. And the last question is, if you focused on implementing some of those ideas, what do you think you could increase each number to? So let's work through these. We've gone through the first question. We understand what Nigella's numbers are. So now we're actually going to work through questions 2 and 3. As we mentioned before, Nigella's a great host. Her retention rate is 100%. She keeps all of her customers. You can't get any better than that. So there's no use focusing on that number. So let's start to focus on the other numbers. Nigella's generating about 20 new leads per year, which is just under 2 per month. So what could Nigella do to generate more leads than she currently is? The first place to start is marketing. She could do advertising, perhaps promoting her business at the local school to get more mums to drop in for coffee after they've dropped the kids off. Maybe she uses social media to promote her specials. She could do some direct marketing by making contact with more businesses to take on catering for their events. She could collaborate with other shop owners, for example, having joint promotions with the local hairdresser or florist. So there's some of the ideas that we've generated from just focusing in on generating leads. Now, if she implemented those ideas, she might be able to increase her leads. Normally during a planning session, I don't give the answers to the client. My role is to extract the answers out of the client. So we don't have that choice here today. So I'm going to suggest she could get her marketing and she could increase this slightly. She might be able to generate 3 leads per month, which is 36 leads per year. The next key driver is conversion rate. Currently, Nigella converts half of these leads into customers. So for every potential 2 customers that walk in, only 1 buys. She needs to understand why that is. So what things could she do to improve her conversion rate? Maybe her sales skills are not as good as what they could be. So maybe she should do some sales training. One reason customers might walk out, one reason is simply because they're not being attended to quickly enough. Have to accept in a business like this, you're never going to get every potential customer to buy. Some just won't like what you have to offer. Others just won't like the feel of your cafe. But in Nigella's case, if she gets better sales training and she maybe staffs up a bit to respond faster to customers when they walk in, she might be able to increase her conversion rate. And I'm going to suggest that she increases it to 55%. It's not a big increase. But you could see if she can get more leads in and she can convert more of those leads to customers, she will double the number of new customers she gets in a year from 10 to 20. So some small changes makes a much bigger outcome. So if we look at her situation now, she started with 410 customers. She acquired 20 more new customers during the year. So she's finished the year with 430 customers. At the moment, those customers are buying from her 35 times a year, which is just under 3 times per month. Now, there's lots of things Nigella can do to get customers to buy more frequently, getting them to come into the shop. So some of those things will be driven by the marketing that she's done. So I'm going to suggest here that if Nigella, without much effort, can get her customers to come in one more time per year, the next driver is average transaction. We look back through Nigella's counter system and we can see that her average transaction value, $54, has stayed constant for quite a while. This tells me she hasn't increased her prices. Now, this is a dangerous situation for any business owner, let alone a cafe, to be in. The price of your inputs are increasing all the time. So it's very important that the price of your goods that you're selling, the price of those goods keeps up as well. So I'm going to suggest to Nigella she should have a 10% price increase. Often clients balk at a recommendation like this. So it's very important to break it down to show what it means and make sure those decisions are being made on the facts rather than just the initial emotion. So in a situation like this, if we increase the price of a cup of coffee from $4.50, it would go to about $5. That's not a big increase. If we look at a $20 meal, a 10% increase would take that to $22. Again, it's not a big increase. So it's really important to make sure that the decision to increase a price is made based on the facts and not the initial emotion. There are other ways other than a price increase to increase the average transaction value. Upselling to more expensive options are a really important thing to do. Special meal deals are a really good example of this. Cross-selling is another well-known way of increasing the average transaction value. So if Nigella can go through and find some really good ways of increasing the transaction value and put these in place, I'm going to suggest that she could increase her transaction value to $62.70. So we can see by putting all of those changes in place, her sales will increase to $970,000. That's just under $200,000 for the year. So at this point in time, when I'm working with a client using the growth equation, I take a pause so we can look at where things are at and just do a reality check. But it also allows us to take stock of which changes we made led to the biggest impact. So I'm going to go back and have a look at each driver individually. And that's going to show us which driver gives us the biggest result. If we go back to the number of leads, I'll take that back down to 20, and we can see the 970 has dropped to 950, so a $20,000 increase. So the number of leads is pretty important. So that's something we would want to focus on. I'll look at the conversion rate and take that back to 50. Well, that hasn't made such a big difference. Sales have only dropped from 970 to 966. So conversion rate is not as important as what we thought. Having a look at the number of transactions per year, we only increased it one more time per customer per year. So I'll take that back to 35 and see what difference it made. Well, that's a very substantial difference. So it went from 970,000 down to 943. So that's around the $30,000 mark, $27,000. So it's a very substantial amount. So getting your customers to come back more times per year in this case made a really big difference. So let's have a look at the average transaction value. I'll take that back to 54 and we can see it's dropped down from 970,000 to 835. So that's a really substantial amount. It's 135,000. So the average transaction value is absolutely essential. So Nigella needs to do as much as she can to get that as high as possible, while at the same time keeping all of her customers. So we know these two here were the main areas that Nigella needs to focus on because they give her the biggest result. The third largest area is the number of leads. So they're the areas that Nigella should focus on. So we have a look at cost of sales and we see that Nigella's cost of sales are running at 42.1% of sales. We know from industry benchmark that that number is too high. Cost of sales for a cafe the size of Nigella's should be no more than 34.8% of sales. So that's about 7.3% difference. Now we know her price increase will help a lot. And the reason we know that is because increasing your prices will not increase the cost of your inputs. So therefore, the higher the price goes, the lower the cost of sales will be. So that's going to help a lot. But she also needs to look at the prices of her inputs. She should be negotiating better prices with her suppliers, or she should be finding alternative suppliers that can provide similar or the same products for a cheaper price. And that's a really obvious way to reduce the cost of sales. A hidden cost, however, one that is not obvious, is probably waste. I will suggest to Nigella she monitors what she's throwing at the end of each day. If it's a lot and she can cost that out, she'll then need to work out ways of reducing it. Maybe it's just as simple as making less and accepting that it's okay to run out of some things at the end of the day. So assuming Nigella can get the prices up to where we wanted them to be, she can negotiate lower prices with her suppliers and also reduce her waste. I'm going to make an assumption she can get her costs of sales down to 35.6%. Now, I know this is still higher than the 34.8% the industry benchmarks tell us. However, sometimes it's not possible to get to the goal that we're looking to achieve in one step. Maybe it'll just take longer than a year for her to get there. And that's okay. We also have a look at Nigella's expenses. And when we compare her expenses to benchmark, they're actually lower, 46.4% versus 58.7%. When we do the benchmarking, we actually split out wages. It's usually the biggest expense in the profit and loss statement. And Nigella's wages are about 6.2% less than benchmark. Now, probably explains why Nigella's feeling so tired and that she's working really hard and not getting as much profit for the hard work that she's doing. But if she increases her turnover by 200,000, she's going to need more people in her business to do it. And it's probably not the only expense she's going to need to increase. I'm actually going to increase Nigella's expenses to 505,000. Now that's 52% of her sales. That's still lower than the 58.7% in industry benchmarks. Now, she's going to increase her expenses. She's going to need to. Firstly, she's going to need the extra staff to cope with the workload and free her up to do the things that she needs to do working on her business. To attract new clients, the marketing is going to cost something. If she's going to do advertising and promotion and she's going to do collaborative advertising, she's going to need to spend money to do that. I've also allowed more accounting support, more IT. I think she's certainly going to need a business planning session, more regular catch-ups to make sure that she's staying on track and the numbers are doing the things that we want them to do. And if she's making more profit, then she'll definitely need tax planning. So if we put all of those numbers in, we should be able to see where it's actually taken us. Come back up to the top of the page. Well, we can see that net profit has increased from 89,000 to 119, almost 120,000. So that's over a $30,000 increase. The good thing about this, though, is that Nigella's not working as hard as she was. Her business is properly staffed and her role has changed from being someone who's working deep in their business to someone who's working more on their business, more like a business development manager. She's just not trying to do everything. The other good thing about this means that the quality of her profit has actually changed. It's not reliant on her as much. And when someone comes to look at her business, maybe to buy it in the future, if it's less reliant on Nigella, then it certainly makes it more attractive to someone who wants to buy it. I'm actually going to go back to the presentation now. So as you can see, we use this growth equation a lot. And normally at the end of a session where we would have finished up before, and believe me, it takes a lot more than 30 odd minutes. These sessions can take well over half a day, depending on what we need to do in a business. So how do we help our clients, particularly those who own hospitality businesses like cafes and restaurants? Well, we set up cloud-based accounting systems for them, and we tailor them for hospitality businesses. We can help them set up a POS system like Counter that's going to really give you good management information so you know what's happening in your business and you can monitor to see if the changes you're making give you the results that you want. We also set up cloud-based accounting systems and we link up the POS system to the accounting system to make it really smooth and easy for it to operate. The benefit of having cloud accounting systems is that you don't need to keep the system updated, and it allows us as your accountant to log in and see how things are going. We also help clients benchmark their businesses, and we help them establish KPIs. Now, we talked about some benchmarks today, but there's a lot more benchmarks than the ones we focused on today. And we also run business planning sessions using the growth equation tailored to your business needs. So, a couple of things out of today. If you want a copy of this presentation, then email us at GTC FIN. Sorry, there's a mistake on there. It should be gtcfin@gtcfin.com.au. And we will send you a copy of the presentation. It'll include the PowerPoint presentation we went through, the growth equation, and it'll also have the fictitious profit and loss statement of Nigella's with some of those benchmarks on there. The other thing, if this has interested you and you want to do something about improving your business, why don't you make an initial consultation with us? We actually don't charge prospective clients for those initial consultations. We pick up the cost of those, and we have a talk about what's happening in your business and how we might be able to help you. So thank you very much for listening in today. I hope you got some value out of it, and hopefully we'll be talking to you soon. Thank you.